Tesla just delivered more than 480,000 vehicles in Q2. That is a very strong number, but the stock dropped. And in my view, this was not because the delivery number was bad. It was because the market is now asking a different question. Not how many cars did Tesla sell, but how much profit did Tesla protect while selling them? Hi, this is Ken. Today, we are looking at Tesla's Q2 delivery result. Tesla delivered 480,126 vehicles in the second quarter. That was far above market expectations, and it clearly showed a major recovery from Q1. Normally, when a company beats expectations this much, the stock should move higher, but Tesla did the opposite. The stock sold off. So today, I want to explain what this reaction really means for Tesla investors, because this is not just about one delivery report. This is about what the market now wants to see from Tesla. First, let's be clear. The delivery number itself was strong. Tesla delivered 480,126 vehicles. Model 3 and Model Y accounted for 467,762 deliveries. Other models came in at 12,364 deliveries. Production was 451,758 vehicles, and energy storage deployments reached 13.5 gigawatt hours. So from a business momentum perspective, this was not a weak report. Actually, it was one of the strongest signals Tesla could have given after a difficult Q1. For anyone saying Tesla's EV business is collapsing, this report makes that argument much harder. The core EV business is still alive, still large, and still capable of surprising the market. But here is the key point. The market is no longer satisfied with delivery volume alone. Investors are now looking at quality of growth. That means margins. If Tesla sold 480,000 vehicles with healthy pricing and controlled incentives, that is very bullish. But if Tesla achieved that number through heavy discounts, promotions, financing deals, or inventory clearance, then the headline number may look strong, while profitability weakens underneath. And that is why the stock reaction matters. The market is saying, great, you sold more cars, now show us how much money you made. That is the real test. This is especially important because Tesla is not valued like a normal car company. If Ford or GM delivered far more vehicles than expected, investors might focus mostly on volume. But Tesla is different. Tesla's valuation includes EVs, FSD, Robotaxi, Optimus, energy, software, AI, insurance, and the supercharger network. In other words, Tesla stock already prices in a lot of future success. That means the bar is much higher. The market is not just asking whether Tesla can sell more vehicles, it is asking whether Tesla can turn its future story into real financial proof. And that is why this sell-off is important. I do not think this was a sign that Tesla failed. The company delivered a strong number, but the stock had already run up before the report. Tesla shares had moved strongly into the $430 range as investors started pricing in a strong Q2 delivery result. So when the good number finally came out, many short-term traders likely took profits. This is the classic market pattern. Buy the rumor, sell the news, but I think there is a deeper message here. The delivery beat was strong, but expectations had already moved even higher. There was also another positive development. TSLA ended its investigation into Tesla's phantom braking issue. For autopilot, FSD, and Robotaxi, safety and regulation are extremely important. So this should have been a positive headline, but the market did not really reward it. That tells us something. Right now, investors are not focused only on whether one investigation has ended. They are focused on margins, earnings, valuation, and proof that Tesla's future businesses are moving closer to monetization. Positive news existed, but it was not enough to overcome the market's bigger concern. So what should Tesla investors watch next? In my view, the next real test is Q2 earnings, not deliveries. Earnings. There are three things I will be watching closely. First, automotive gross margin. If Tesla delivered 480,000 vehicles while margins fell sharply, the market may stay cautious. But if Tesla protected margins while delivering this volume, then this sell-off may look more like short-term profit-taking. Second, inventory and pricing strategy. Deliveries were higher than production, which suggests Tesla may have reduced inventory. That can be positive, but investors will ask how much discounting was needed to do that. Third, management commentary. The market will want updates on Robotaxi, FSD, Energy, and Optimus. Not just exciting words, but real progress, real timelines, and real business impact. As a Tesla investor, I see this quarter as a very important transition point. Tesla has shown that demand is not dead. That is good. But now the company has to prove that demand can return without destroying margins. This is the difference between growth and profitable growth. And for Tesla stock, that difference matters a lot because Tesla is not priced for survival. Tesla is priced for leadership. It is priced for EV strength, AI progress, autonomous driving, energy scale, and future platforms. So the market will demand more evidence. My conclusion is simple. Tesla's Q2 delivery number was clearly strong. 480,126 deliveries was a major beat. Energy storage deployments at 13.5 gigawatt hours were also very strong, and the end of the TSLA investigation was a positive development. But the stock dropped because the market is no longer buying Tesla based on delivery numbers alone. The next question is margin. The next question is earnings. The next question is whether Robotaxi, FSD, Energy, and Optimus are moving from vision to measurable financial reality. This was not a Tesla failure. It was a market reaction to expectations that had already moved too far ahead. So for me, the message is this: not deliveries, but margins, not story, but numbers, not expectation, but proof. That is the next phase for Tesla stock. Now, I want to hear your view. Was this sell-off just short-term profit-taking? Or is the market sending Tesla investors a bigger warning before Q2 earnings? Let me know in the comments. And if you follow Tesla, FSD, Robotaxi, Energy, and the future of AI, subscribe to Life in the Future. Thanks for watching and enjoy your life with Tesla. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.